Welcome to the January 2nd, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. Happy New Year, and this is all about a prosperous and successful new year for you, McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, devoted to your success as an investor. As president of McGowan Group Asset Management, a team of 10 devoted to your success, I invite you to set your time to actually schedule a Zoom upgrade to your investment plan or come down to the Crescent and actually meet the team that cares. We're going to start this week on the Financial weather map, if you will, with a 15-year chart of inflation. Now this is the commodity index. That's the low of 2008. And you can see commodities went up nearly 2 times from that point. That was the depths of despair when everybody sold stocks and went the wrong way, pretty much. And then you had a huge increase in commodity prices. Everybody was worried about inflation in 2011 because of the Fed balance sheet, which I'm about to show you. Well, instead of inflation, we made more of the commodities and we saw deflation or disinflation during this period right here. And look right here. That's why everybody's worried about inflation. It's called a recovery. And I'm going to shed some light on what the Fed is doing, especially with their recent meeting. Now, this is the overall inflation rate. Boom. 6.8% is the highest in 40 years. Supply disruptions, and we're going to get to that, as well as what does inflation mean. At 6.8%, you would expect bond yields to soar and bond values to go down. Not so fast as we go through this presentation. And we're about to see the Federal Reserve balance sheet. This is the amount of printed money that the Fed puts into the system. Lubrication, we could call it. They were below $1 trillion, arguably way too tight back in 2008. Well, the crash happened. Real estate, actually the entire real estate industry and banking industry were essentially bankrupt at that point, and they printed lots of money. Took the balance sheet all the way up to, notice they kept printing money through 2013. 2014, they leveled it out, and that was about 4.7 trillion at the peak of electronically printed currency. Key concept here. Now they've gone to 8.7 trillion. They were screaming inflation back in 2011, and the Fed actually ended up printing more money, but inflation went down. The inflation rate went down. Now, what does it mean for the financial markets? At this point, the Fed is going to stop printing money in 2022. There's part of your update. And the financial markets actually responded in a fairly benign way when they made that announcement here in December. So let's go to the next one. S&P 500 index. There is the low of 666, ironically, back in 2009. It was March 9th of 2009. I printed a list of 20 companies we believe won't die because nobody wanted to buy stocks at that point. The stock market did not recover to new highs until the end of 2012. Wow, that's a key point. 12 years of zero return on the index value, except for the yield of about 1 or 2%. Then you had this explosion. Look at this explosion. That's happened since the pandemic last year. When we look at these, we say, wow, what's the trend? Well, you can have long periods of a flat market. How are you going to succeed? It's called interest and dividends, because you still own great assets. And if you go through 2000 all the way to 2012 with no appreciation and several downdrafts, how do you benefit? We cover that in the program at networthradio.com. and we get into much more detail about how to upgrade your financial plan. Go to networthradio.com, fill out the preliminary client questionnaire, and yes, if you're already a client, we would love to Zoom or have you in the office to upgrade your plan again for the next decade. Are we going to get this kind of appreciation again? We don't see it very often. In 35 years of doing this, you don't see it very often. This is technology and innovation. Back in 2000, the NASDAQ 100 fell by almost 90%. Fell by almost 90%. Technology was the rage in 1999. And here you see the low and an extraordinary high of almost 15 times what the low was back there. Well, we started to correct again here at the end of the year. What does it mean? Multiple contraction. The Federal Reserve said we're going to raise interest rates, we're going to stop printing money, and that says multiples will come down. When you buy stuff that is at 7 times earnings, like some of the medical dividends, you're actually protecting yourself from the next correction. Now here is financial innovation. Special purpose acquisition companies. That's a way for a company to go public. Somebody raises $500 million, for example, and says, we're going to buy a great company and take it public like that. They're coming public too soon. And look at this financial frenzy. Almost 500 companies IPO'd as a special purpose acquisition company. What does it mean? It means that companies can go public much easier, and many of them way too soon. I'll cite electric vehicles as a speculative bubble. When the Fed starts to tighten, speculative bubbles like cryptocurrency and potentially some of the electric vehicle companies actually contract big time. That's a warning, by the way. This is West Texas Intermediate crude. The high in 2008 before the collapse, $147 a barrel. Wow, inflation adjusted, that would be $200 a barrel at some point if it was inflation adjusted for a super cycle. This arguably looks like the beginning of a super cycle, and what happens during that time? Well, energy companies make a lot of money, but they're paying the highest dividend rates in the S&P 500 right now. Solar, we are BTU agnostic. We don't care so much about traditional energy versus clean technology. We'd like clean technology better, of course, but what's happened to solar prices? You can put a solar roof on your house with a battery wall and boom, what do you get? Low cost energy and clean technology. Wow, what does that mean? Lots of batteries. There is a battery gold rush, especially with the infrastructure package. And this is good news for the solar industry and of course for the planet and climate change. Here we go with Bitcoin. What about cryptocurrency? The peak value was 2.6 trillion, okay? 2.6 trillion right here at 69,000 on Bitcoin. It represents, by the way, about half of the cryptocurrency market, so they tend to move together. They're correlated, just like stocks. Well, don't forget this. 2017, Bitcoin reached $20,000 a coin. In the pandemic, when you wanted your money the most to buy bargains or at least have some cash, Bitcoin had declined below 4,000, an 80% decline from that peak. Wow, that is a bad 2.5 years. So don't assume that it always goes up, because you could lose 80% over a period of 2.5 years based on this. Now we look at this, whoa, what happened here? There is a problem in the cryptocurrency market, and we cover it at networthradio.com in the New Year's program. We cover it in more detail. So, 2022, medical dividends, energy infrastructure, Global high yield, yes, well managed, and tactical safety. Those are the four things we're building into each and every investment plan at McGowan Group Asset Management. Join us at networthradio.com. Be sure to subscribe. YouTube.com, McGowan Group. When you subscribe, you're going to get this kind of update for insights designed to help our clients make more profit. And this is a team of 10 of real portfolio managers dedicated to your success. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.